As the markets are closed today, I've decided to do a video update explaining all of the different scenarios that could happen for the next coming weeks. They all point out that the highest probability is hitting all-time high in the next coming weeks. Of course, we could lose the lows of the range at $100,000. There are some bearish case scenarios locally, and I want to explain them. But overall, the most important thing is understanding that this 5-wave move to the downside, we are not looking at as a leading move. So we cannot label this as an A wave or a 1 wave. This is your 2nd wave, and we are going to break down aggressively in a 3rd wave. And there are some simple reasons, okay? Simple invalidations to understand that. Your wave 4 right over here overlapped your wave 1. And if we are thinking of an expanding diagonal, we can see how your wave 5 is shorter than your wave 3. Now, your wave 5 needs to be longer than your wave 3 when we're thinking about an expanding diagonal. And also, we have 5 waves to the downside in your 5th wave. And I like to see your 1st wave right over here. It does count better as a 5-wave structure, okay? So we do see a leading move to the downside, but your 5th wave is moved in 3 waves, okay? So there's too many red flags here to believe that this is going to be your wave 1 or your wave A, and you're going to break down here successfully in a wave 3 or a wave C, meaning that this automatically turns into a wave W, where you do have your zigzag move here to the downside, and right over here you do have that expanding diagonal where you do have your 5th wave being longer than your 3rd wave. So yes, this counts better as an A, B, C, or potentially you have a 3-wave structure here, and this right over here is your corrective structure. So your W can be here or it can be here. However, we cannot count a 5-wave impulsive move to the downside here or an expanding diagonal because your wave 5 is smaller than your wave 3. So there's too many red flags, meaning that it is low probability that we break down successfully. Now, does that mean we cannot go down below 100K? Absolutely not. There are a few scenarios that I want to explain in this episode so you can understand that, yeah, there is a chance actually of dipping down below $100,000. But regardless, all of the scenarios point out, even though we do form a higher low from here, is taking out all-time high in the next coming weeks. And let's start off with the bearish case scenario. Okay, we got a few bearish case scenarios that would be actually getting a dip. I'm going to explain why this has low probability. So we are going with the original idea here that this is a 3-wave structure in your wave W. You moved in a 3-wave structure in your wave X. And right now we are forming our wave Y. Now your wave Y here would be a flat, okay, where your A wave is moved down in a 3-wave structure. Now this would be a double zigzag. The problem with this double zigzag, you've hit the 7/8 Fibonacci. The moment your wave X here in a double zigzag takes out the 70% Fibonacci retracement, it decreases the probability for a double zigzag. So just with this scenario, you can see that this has lower probability, but it's not an invalidation. It just decreases the probabilities, okay? But you need to say it's definitely possible. Now, where could this double zigzag finish? It could finish at the 1-to-1 extension, which is around about 100.9K. 1-to-1 would be ideal, probably sweeping up the lows of last week at 102.8, getting an aggressive drop, and then getting a significant bounce. Preferably, we do not take out here your low here of W at 100.3K. Now, after this bounce, of course, we would be expecting all-time highs, or at least take out here 110.6. Most commonly, you would get that extension, okay, on your wave B for an expanding flat. Now, you would be moving up here in also a 3-wave structure, right? And then aggressive swing failure pattern from all-time high to move down in a 5-wave structure to take out your A wave in this C wave and potentially go to $98,000 or even $96,000, right? The mid-range of 90K levels where we have that massive order block. We do have a massive range right over here eventually with that naked point of control. In this case, would be sitting around about $95,000, right? Could we reach that? I know it's extremely choppy, but we are in a big fat range, so we need to take this into consideration. One-to-one extension, you know, would possibly get that bounce, maybe front running this low that we did have a couple of weeks ago. Something to take into consideration. Would I get into that long? Potentially yes. Depending on the movement, I'll analyze very carefully on the lower time frame. Could we swing failure pattern from the lows of last week? Also, for a very shallow three-wave structure here, double zigzag, absolutely. We're just going to have to be paying attention to the local price action. If we get some sign of strength, then eventually we would be looking for those new long positions. So that is the first bearish case scenario. This right over here would still be bullish. So you'll be taking out all-time high, but overall, you'll be coming down to sweep up the lows of the range and break it here with that ABC flat inside of your W. Now, this would still be bullish, right? Coming down here to this zone, to this order block right over here, fair value gap if you wish, naked point of control, then we would be looking for some sign of support to then look for some swing long positions, because overall in the next coming weeks of this happening, I would be expecting new all-time highs, just understanding that all of this is still a sideways corrective structure. Now let's go with the bearish case scenario. I mean, this is short-term bearish, then it would be bullish, then bearish again, right? So very confusing range. I know a lot of bears and bulls are fighting right here. It's bullish, it's bearish, right? But overall, this is how the market can move. This is option number one. Option number two here, looking at the bearish case scenario, this would be the most aggressive one. We are labeling here this movement down from all-time high in a three-wave structure to finish your wave W. You got your very shallow wave X here, only hitting the 382, which is uncommon for a sideways corrective structure in a WXY, okay? Most commonly, you do get above the 70% Fibonacci to form a sideways corrective move. This is very common, 382 or 50% for a double zigzag. But nevertheless, it is also a possibility, so we need to take it into consideration. Now, this would be your zigzag in W, your wave X very shallow in time also, and your wave Y is the longest in timing, as you can see right over here, okay? Now, we are moving down in your A wave in a three-wave structure, okay? We can clearly see there's a three-wave structure in your wave A, and three-wave structure in your wave B. There is another problem here. We almost tapped the 1.618 extension. That is very rare target for your wave B in a flat, okay? Most commonly, the 12361382. This really did overshoot quite a bit, almost hitting the 1.618 extension, which is extremely rare. Let's take a look at the extension here from your A wave, all right, and flip it here to see your B wave target where it reached, and we can see how we have hit almost the 1.618 extension. Well, literally it did hit that 1.618 extension, as you can see, and a B wave target, okay, in your expanding flat, most commonly in between the 1236, 1382, being the 1.618 very rare. So we know that this is a rare scenario, okay, to have that B wave hitting the 1.618, but it's not an invalidation. We need to take it into consideration. Now, this would be moving down in a contracting diagonal, okay? An ending contracting diagonal where all of the waves have been developed in three-wave structure. As mentioned a few days ago, I like to see this better as a three-wave structure. You ended up here with the highest amount of volume. You did get this massive bounce, so there's no wave 4 and wave 5. This for me is a three-wave structure. This to the upside is a three-wave structure. And possibly right now, we are going to be forming a three-wave structure to the downside, getting the most aggressive one here in your wave 3 of the contracting diagonal. This is very much a possibility, okay? I have to say, right? We just coming to the conclusion. I got into a call with 𝗬𝗍 and looking at the different scenarios, and we just mapped up many of the different scenarios that could happen, all right? Because we're overall bullish, but we understand yes, the market is choppy. We're in a very complex sideways corrective structure. We need to take into consideration the drops below $100,000. All right, then we'll go through the bullish case scenarios, of course. But overall, this would mean that you're actually going to get below the lows of the range of $100,000, right? You get your 3-wave move to the downside in your 3rd wave of this contracting ending diagonal. Now, it's important because we have 3 waves, right? Ending diagonal, that is good for this wave C in your flat of your wave Y, okay, of the larger WXY. Now, we would have to see one more great move to the downside, sweeping up 100K, get that bounce in a 3-wave structure, and then move down, of course, to claim the lows once again, and then hit the order block or the naked point of control range, the mid 90K levels, where we would be very bullish and getting ready for some epic swing long positions. Of course, we need to get down there. We need to see proof of support and analyze that local situation. What are the other scenarios that we do have here looking at the bearish case? Well, we do have this scenario right over here where we are still continuing, okay, the sideways WXY, where we have that 3-wave structure here of ABC in your wave W. You have also your wave X that is forming this triangle. It hasn't finished yet, where we have a 3-wave move up in your wave A, and then B, C, D. We're looking for a bounce here to hold, not claiming this low, and looking for one more leg to the upside here to around about $106,000 to $107,000, which is also with the value area high of the entire range. This would be very interesting to analyze to get into a possible short trade. Of course, we need to get up there, and how we get up there is going to be crucial to analyze if it is worth to get into the short, right? Moving up in a 3-wave move, then, you know, this is going to be analyzed in the next coming days if we get up there. Of course, we are analyzing this and getting into the trading setups either in the Discord or in the Telegram, guys. If you want to join the Telegram, okay, where I'm entering here on some day trades or looking for a swing trade, join the Telegram, which is the first link down below in the description, or the Discord, where you got the modules, daily updates from the rest of the coaches, okay? There's much more of packed information on the Discord, guys. That's the 5th link down below in the description right over here. Join the Legends community. So let's continue with the other scenarios. Well, this would mean that we would be looking for a bounce to finish this triangle in your wave X, and then we need to finish our wave Y. There are 2 options here to finish your wave Y, being the flat, the preferred scenario, and the highest probability. You can see it here in the white, where you would be getting that dip, claiming all of the lows of the triangle most commonly, and then getting a rally to get above the start of your A wave, okay, and then forming that B wave, being shallow of claiming all-time high very possibly, and then sharp move to the downside to preferably sweep all of the lows of the range below $100,000 to then be very interested in a long position because you're finishing your flat here in your wave Y. Now, this is going to take many days to develop, right? We're still very rangy. We're entering into the summer. Volume is low. It could be just a volatility fest of a few thousand down, a few thousand up, right? It's going to be very confusing for all of those bulls and bears, and all of the scenarios do see a range still continuing, right? So that is one scenario. Another scenario is forming a triangle. Of course, it is quite rare to form a triangle in your wave Y if you have formed a triangle in your wave X. It's not impossible, but it is rare, but it is definitely a possibility where you do get that breakdown, you get the bounce, move down, back up again, okay, and you form another triangle here in your wave Y to then look for the price to break out and hit all-time highs weeks after forming this triangle. Now, another scenario that could happen, we're going to start looking at the more bullish case scenarios. We are getting a bit of a drop of a few $100s now in the last 10 minutes, right? But overall, the other bullish case scenarios are also very interesting. As you can see, these are bearish case scenarios locally, all right? All of the ones that I've shared here, they are more bearish locally, right? Which are all getting a kind of a drop, okay? One little pump and then a drop, either for the flat or for the triangle. You know, lots of them, you know, do see a possibility of actually moving lower, okay? Now let's go with the bullish case scenario. All of these scenarios that I'm pointing out that are locally bearish for the next coming days do point out for new all-time highs regardless, okay? It's just going to be very choppy, a little bit of breakdowns, and of course, it's going to take some time. Now, other scenarios that are bullish, well, we do have this triangle right over here that, you should not really claim this low. Could we form a larger triangle here where we just claim the low here and get a bounce and the triangle is just going to be much larger? It is definitely a possibility that the triangle could be, extending for the next week or two. We just have to say, summer is in, maybe volume is going to decrease and we're not going to see much volatility. Is there a chance of just sweeping lows, getting another bounce, and this three-wave structure is not finished in your A wave? That is definitely a possibility, okay? So overall, that is one scenario, the triangle. We are finishing our C wave maybe here. It's important that we do not claim the A wave, okay? So a bit of choppiness here, ending up in a bounce and then a movement down, okay? This would be very interesting because we would have all of the waves from the triangle and it could get very interesting, all right, to really analyze some potential longs either in your E wave or look for a sign of strength with a 5-wave structure to the upside and look to get into a long position to head up to all-time high. We need a little bit of more information to be confident in this swing long position to take out all-time high, right? So it's still very, very soon. There are many bearish local scenarios as explained, okay? So we just want to be a little bit aware of them. The other triangle, which is the most bullish one, which I think has low probability because your wave X has only hit the 382 for a sideways WXY. Most commonly, you do get above the 70% Fibonacci retracement, okay? So just hitting the 0.382 Fibonacci is rare for a sideways corrective move. However, it is not an invalidation, so we just put it on the chart. This would be the most bullish case where you have a 3-wave structure to the downside, your wave X right over here, and right now you have a running triangle where you have your A wave, the B wave claiming the start of your A wave, right? And then C, D, and E. I think this has low probability, okay? There's some other bearish case scenarios that I do like better than this one right over here. But most importantly, this one should not claim this low right over here of last week, okay? Which is sitting at 102.8K, okay? So we just have to form a higher low in this zone to actually start moving impulsively to say maybe this does have a chance to be the end of this structure, okay? For the moment, not my preferred scenario just because wave X is very shallow here, hitting the 382. And for a sideways WXY, you prefer wave X to be a little bit more sharp to the upside, right? Hitting this 70%, at least the golden pocket, or getting above the 70%, right? 7.8 Fibonacci retracement from your wave W. Not many scenarios. Let's go and zoom in on the slightly lower time frames, levels to take into consideration for anybody that wants to intraday on this small little range, right? We've been very, very rangy for the last few weeks, okay? Ups and downs, okay? There's a lot of people saying, this is going to end up rolling down in the end. There are some bearish case scenarios locally, as explained. But the most important levels, if you want some levels, okay, to pay attention as resistance and support, well, we do know that the liquidity grabs are great. So the lows here from Tuesday, it could be an option. You could create that double bottom and rally to claim the highs of yesterday above 105.5. You could actually claim the lows right over here of last week as well and create that kind of liquidity grab swing failure pattern for an instant rally in the next coming days. So we just need to consider those two pivots, higher lows, all right, from the last few days to create a swing failure pattern. If we break down beneath them, of course, you do have the value area low just beneath the low of last week. That could be an interesting level of support. That is in confluence with the 7.8 Fibonacci from pivot low to the pivot high, which was almost hit with that movement down. Okay, so 7.8 Fibonacci with the value area low, with the low of last week, could be an option for a swing failure pattern and get a decent rally of a few $1,000s. That is definitely a possibility. And if we do take a look at the other levels of resistance, if we were to get a rally, well, preferably, yeah, a swing failure pattern from the highs of yesterday. If we do get that rally, right, it does seem pretty bearish. Could we get above yesterday's highs and then get a rally, a movement to the downside, yes, I would consider it, right? We're in a small little range in the last 24 to 48 hours. So sweeping up highs, then the lows, or sweeping up lows and then the highs, you get the deal, right? Try and look for a swing failure pattern either from the lows of the range or the highs of the range. Those are the easiest trading setups. If we were to get that rally here to the upside very aggressively and get to above $106,000, there is a daily level right over there, okay, which is very interesting because it's with the golden pocket of the last pivot high here of Monday to the pivot low of Tuesday. Golden pocket with a daily level, that is enough confluence to actually realize that this could be a rejection point. So that would be a very interesting zone to look for, a swing failure pattern kind of movement, right? Where you get above the daily level, hit the golden pocket, and you start losing it. A local double top here could be a possibility. So this is a range that looks interesting for a short position. We're going to have to see that reaction at those levels. If we were to go up there, of course, we are $2,000 away from that level. So we just need to take it into consideration if we were to get the pump, okay? It could be an interesting level to short. Guys, this is it. Thank you very much for joining. If you are interested in trading, guys, make sure to check out the bonuses down below. We do have weeks and we do have bluffing. They do not require any information, just an email and a password to sign up. You got insane perks over here on bluffing, 20% cash back on your deposit. Also on weeks, you do get 20% cash back. You got 25% fee reduction. You have the links down below, second link and fourth link for weeks or bluffing. Thank you very much for joining today's video. Just looking at some scenarios. If you want more trading updates and possible setups that we are looking for, make sure to join the Telegram or the Discord. That is the first link, or the fifth link down below in the description, the sixth link actually. Thank you, and I'll see you in the next one.